And then you look to do the rest of the raise, and we had, a good $800,000 worth of commitments pull out when the Corona market started. Not because anything about the investment changed. It was merely because, when the markets crashed 26%, 30%, this is a significant chunk out of a lot of people's portfolios. A lot of people have collateral costs. A lot of people aren't suddenly liquid. They can't make those investments.
Hello, everybody. I'm here with CJ, Jensen, Matt, Volz. These guys are principals and partners for Mana Supply. Matt Volz, I'm gonna read here from the bio so I don't mess up. Matt went to Georgetown University and James Madison University, and you got your master's from Georgetown there. You're a veteran commercial real estate executive with experience in private equity, capital markets, investments, dispositions, and asset management. In fact, when you were at Colliers, you had over $3.6 million under management there that you were overseeing. And then you went to Excelsa Holdings and you oversaw acquisitions, over $400 million in assets there. CJ, you went to Wake Forest, got your JD at Wake Forest as well. Your background, you're a former lawyer turned successful entrepreneur. You've had a history of startups and exits across multiple industries. Most notably, you're a board member and treasurer of the National Cannabis Roundtable, recipient of the 2019 Cannabis Dealmakers Summit Rising Star Award. You're a former senior executive at Hudson Global, Xerox and CS Disco, and you're the co-founder of Trustpoint International, which had over $60 million in annual revenue. So pretty awesome experience you guys both had there. You have anything to add on? Anything I missed? Who are you guys?
Well, most importantly, we're the founders of Mana Supply Holdings, which is a cannabis company that started here in Maryland, and we've now moved into Colorado and Missouri. And we are a relatively early stage company right now, but we're very, very bullish about the cannabis industry, and we're very excited about the next 3 to 5 years of the cannabis industry. So we are doing what we can.
Matt?
Yeah, I think our different backgrounds has really helped us look at or take a different approach in growing our cannabis business, both from an entrepreneurial standpoint and the expertise that CJ brings, and my real estate background. I think marrying those two backgrounds has really helped us position ourselves well.
Awesome, man. Cannabis. So, right now, real quick before I jump in, I'm going to pull up my stat sheet here so I don't mess anything up. We are right in the middle. It's March 30th, 2020, and we are right in the middle of coronavirus, a worldwide pandemic. As of this morning, there was over 739,000 cases, over 35,000 deaths, and over 156,000 recovered. 2 weeks ago, worldwide, there was 169,000 cases. So significant increase in cases there over the last 2 weeks. And right now, Maryland specifically is on shelter in place as of 8 p.m. this evening. We've been on only essential businesses up until for the last at least week from last Monday, and things have really slowed down from a worldwide standpoint. This pandemic has really shut a lot of places down. We saw the Dow Jones drop over 25%. And similar drops across the stock market. While it's only 3,800 companies, it's really kind of a really good snapshot of what's happening across the nation. The economy is definitely hurting from all of this. But cannabis, which was federally illegal a few years back, is now not only medicinally legal.
Federally illegal.
Still federally illegal. Thank you. Still federally illegal. But in some states is medicinally legal, in some states is recreationally legal, and is on the list of essential businesses right now. And CJ, your background there is the line to the drive-through for your guys' dispensary there for all the cars during this lockdown that are going to get their medicine. So talk to me, Matt, CJ, talk to me. Cannabis, with the shift of the last couple of years and where we are right now. Talk to me about what the impact has been and what that looks like.
Well, I think you can take that question so many different directions. I just want to talk about where cannabis is legally that's a whole discussion that we can get into. But speaking, straight from your cues on COVID, I think that the entire economy in the United States is obviously in this state of uncertainty. And one thing I do want to point out, you said cannabis is an essential business, as it rightly should be. And I'll get into that in a second. But cannabis we are an essential business, but we did have what I call the toilet paper run. You saw these articles in Forbes and Wall Street Journal about the cannabis industry is doing crazy good business over the last several weeks. And I just want to pour a little bit of water on that and say, I'm not sure that that's sustainable throughout the entire economic crisis we're going to face. I think that cannabis is an essential business. It is medicine, and taking that away would drive black markets, and it would drive people back to opioids. And I think that state governments are aware of that. But I do think that we are having to be very conservative with our business because we're not sure what our economy is going to look like overall. So this is not a bonanza. We're not dancing on during this crisis. I think we're all very, very concerned. We have had a nice 3-week run, but I would expect this to level back out.
Matt, what do you think?
Yeah, I would agree with you, CJ. I think right now it's about putting the safety of our patients and our staff first. And so we've made some adjustments to our operations, and we touched on the drive-through that we opened up in our Edgewater location. That's been a great way for us to continue serving our patients in a safe way, and also protecting our staff, and that you don't even have to get out of your car to pick up your order, and you can minimize any sort of contact with folks and make sure you're maintaining social distancing. At our other location, we've instituted a curbside pickup process whereby you can pre-order, pull into the parking lot, and then we're able to serve our patients by delivering curbside. So being able to adapt to this ever-evolving crisis is paramount to us getting through the other side, and getting through the other side safely. So I think that's at the forefront. You talk about sales being up, and I think CJ really hit it on the head there. We did see a significant uptick in sales over the last 3 weeks, but I think we all suspect that's going to level off. I think because folks were coming out and trying to stockpile their medical supplies like they were doing at a CVS, making sure they had 30-60-day supplies. And I think you're also seeing Maryland, for example, you've got limits, right? You can only purchase up to a certain amount on a rolling 30-day period. And so as folks stock up on that, you're going to see a spike initially, but that's going to taper off. So we're watching it very closely, and I think we'll be fine. But we're in this for the long haul, and we got to make sure that we survive.
Yeah, absolutely.
I'll tell you, we couldn't have done any of the things that we've done so far without the leadership of our state government. And Governor Hogan has been really nationally celebrated as being on the forefront of all these things. Our county executive, Stuart Pittman, has been fantastic in helping us as a business locally in Edgewater. And then, honestly, the head of the MMCC, Will Tilburg, was the one that was forward thinking enough to make accommodations for our patients, so they didn't have to come into small confined spaces, which are usually the lobbies of these dispensaries, and check in and sit close to other people and have close consultations. And they just opened it up a little bit to allow us to do things like pre-ordering online, doing phone consultations, being able to run and do the curbside delivery, and in our case over in Edgewater, open up that drive-through that we had been working with them on for quite some time. And without that forward thinking, we would have been putting our own staff in a lot of risk, our patients at a lot of risk. And I just really applaud all of those people. They've done a fantastic job for us. for all of us, for the community.
Awesome. Yeah, you touched on something that I think is was interesting. You know, you guys both mentioned how in the long run you think it's probably going to level off, and I think, you know, something we had talked about previously. You know, marijuana, while it's, you know, while you're allowed to sell it, while it's essential in Maryland, which is super cool, you know, it's also still federally illegal, and that still holds you guys back. And I think when you look at a lot of people losing their jobs, you know, and you not being able to really use insurance necessarily to pay for medical marijuana, you know, it's more of a disposable income. You do think that that's going to have more of a significant impact, and how are you preparing that for your business, and what are you looking at in terms of short-term management of the dispensary and the business as a whole?
I think the biggest juxtaposition between the federal and the state right now really comes down to, we're talking about these trillion-dollar, multi-trillion-dollar rescue packages, the CARES Act and things like that, that we in the cannabis business, because we're doing something federally illegal, don't have access to. So, you know, we know that, and we've got to plan our business accordingly. While I do think the spike in sales is going to taper off, and I don't think that that's sustainable, I do think that cannabis is recession-proof. And the mere reason is because, I don't know, I'll give you a great story. My next-door neighbor, my old next-door neighbor used to own a whole bunch of coffee shops, local coffee shops all over Maryland and Florida and the Southeast. And one day I was over at his house and I was drinking out of a Starbucks cup, and I looked down embarrassed that I had Starbucks, you know, that I didn't stop by one of his places. And I said, oh, I'm David, I'm so sorry. And he said, no, CJ, you don't understand. I love Starbucks. Without Starbucks, I would never have all these coffee shops. Meaning Starbucks put coffee and lattes and things right in the middle of America, right? And so what's happened with all these state environments is cannabis has sort of become more accepted. It's being used by a lot of folks to replace more dangerous medicines like opioids, to deal with things like anxiety or neuropathy and all these different things. And they have made that a part of their budget and their life. And so I do think it's recession-proof because people still need that. But I also think that if you did not classify this as an essential business and didn't look at it that way, then you would have an incredible rise in the black market. You'd have black market Starbucks, right? So, and what that leads to, outside of just the criminality of it, it leads to less regulation. And so where we were last fall, in a lot of these states that did not have regimes, regulatory regimes, and we don't have a lot of federal enforcement right now, you had a vaping crisis. You had people on ventilators across the United States, and the Congress was freaked out about it. Everybody's doing these investigations. Can you imagine if we had a vaping crisis right now in the middle of COVID? So I do think that cannabis is recession-proof. I do think that this is probably going to force the federal conversation. We are probably going to move along the federal conversation about cannabis after we get through this crisis, and that's a good thing.
Sure. Matt, do you have anything to add?
No, I mean, as far as pushing this forward, and CJ, you may be able to speak to this a little bit more, but we're still a cash business as well. And so, there's a lot of inherent dangers in operating a cash business, specifically tied to COVID. I mean, you have dollars transferring between patient and our staff that may or may not be contaminated. And so we've got to take all sorts of precautions there and making sure that we're being safe and sanitizing money, which plays into a much bigger conversation about the cannabis industry being all cash for the most part. And I think CJ could probably touch on that a little bit more with his insight from NCR.
I mean, the crazy thing is we have a fantastic bill that's already made it out of the House. That's not even really a cannabis bill. It's a banking bill. And it's sitting over on the Senate side with bipartisan support. But we have no impetus to move it along. The Republicans have no impetus to move it along, and they're really the ones in control of the Senate because we're in this weird election cycle where we're so polarized, and there's nothing really that's been there to move the Safe Banking Act alone. I think we've all been aware of the public safety issues that an all cash business has. I mean, that's pretty obvious from the armed guard you see right here on our screen behind the Prius there. I mean, having an all cash business makes our business very vulnerable to being robbed, right? And our people and our patients and our community. But now I think what COVID has done is really thrown in this notion of, holy cow, you mean you can transfer a virus by breathing on money, by, and now our staff, we're all geared up like the nurses. We're all, I mean, not the face guards, but we've got all the gloves and the masks, and we're using the antibacterial and then the Lysol, just trying to make sure our cash gets cleaner because it's dirty cash. So
wow.
It's incredibly frustrating to know that we have a bill that sitting over there on the Senate side that doesn't legalize cannabis. All it does is get rid of these public safety issues that we've already got that are now exacerbated by COVID.
Sure. Let me ask you guys this. Say that one more time, Matt.
What's the name of that bill? Safe Banking Act?
Safe Banking Act, yeah.
Let me ask you guys this. And you might not be able to share some, but if you could share where you're able. How have the conversations with your investors shifted because of COVID?
I mean, Matt, you want me to take that? Look, we're in the middle of a capital raise because, as you know, in cannabis, there was an incredible run on cannabis. A lot of these early companies that were able to get into it before us in Maryland, were able to get some scale because they were able to access the markets in Canada, the public markets in Canada. Flush with cash from the Canadian markets, they went and they expanded very quickly, and they were rewarded by the markets for expanding quickly. Fast forward to last year, and suddenly they'd had a couple of years at this, and they realized that running a cannabis business is incredibly difficult to do and stay operationally profitable. Most of those big Canadian traded companies are running in the red. And we have such regulatory burdens layered on top of us. And then I don't know how much your viewers know about tax code 280E, but because we're trafficking in something that is federally illegal, when we go to pay our taxes, we can't deduct any SG&A that a normal business would. We're taxed off that top gross margin line.
Unless you touch it, it's not expensed, right?
It's an incredible tax burden on top of the hundreds of thousands of dollars that dispensary right there has in all the things that we need to meet regulatory requirements, from cameras to security to all the different pieces, parts, and all the fees we pay. So running these things operationally profitable are very, very difficult. So you start there. And then we decide we want to grow. We want to grow a big national business. We think we've got a great national brand. We've got a great executive team, and we've got 2 dispensaries in Maryland. And you look around, and if you want to expand and have expansion capital, you take it out of these working cash flows that are thin already. So instead, you go out and you look for investors for expansion capital to help you move into these other states. And we just recently won licenses in Missouri, and we just bought another dispensary in Colorado. And so we were doing another capital raise. So you ask about our investors, and some of our investors stepped up and put more money in. And Matt and I obviously were selling the equivalent of equity or debt to do that. And then you look to do the rest of the raise, and we had a good $800,000 worth of commitments pull out when the Corona market started. Not because anything about the investment changed. It was merely because when the markets crashed 26%, 30%, this is a significant chunk out of a lot of people's portfolios. A lot of people have collateral calls. A lot of people aren't suddenly liquid. They can't make those investments. Most of these folks have told me they're going to come back around when things settle out. But you asked me what our investors are saying about COVID, and I think that they're all just sort of doing what we're doing. Is they're looking at us to be responsible, be conservative, not get out over our skis. And I think that we've had to delay some of our expansion decisions because we want to make sure that we're still standing when all this is over.
All right. That's awesome.
We are still doing the capital raise. So if any of your investors would like to talk to us, please let us know.
It totally shifts the conversation. Let me pause here for a second. I'm going to grab my wallet. I forgot with 3 people. I have to upgrade real quick. Give me 2 seconds. I'm going to edit this part out. I've always done the one-on-one, so that they upgraded me for free for those, I guess, for the long term. But I guess for the 3, it's different. But it's cool because I'll need to do this in the future for having 3 people. So it was only a matter of time before I got hit with the bill from Zoom calls. Expiration date. Let's see here. Bear with me for a second, and then we're gonna jump back into right where we were.
Sure.
Whoops. How do you guys feel while we're kind of somewhat offline here? How do you guys feel about like the direction we're going right now? And if I dive more into that fund, Matt, how do you feel about like directions on what you want me to take in terms of moving forward on that fund?
Sure. We can jump into whatever. I mean, you can always edit it out if it doesn't make sense.
Cool. Yes, me. Upgrade now. Let me make sure we're good here. Confirm. And perfect. I've been upgraded. All right. Let's see here. Hold on. Let me make sure it says, I hope it's still counting down for me. You guys see that remaining meeting time at the top?
Yeah.
Oh yeah, 8:20.
Yeah, why does that still say that? Well, I'm sure it will. Let's see. Yeah, make sure. Well, this will be fun. We'll figure out what happens in 6 minutes. All right, cool.
Got
So,
your picture.
Nice. So you're looking at your investments and your investors, and you're talking with your investors, and you had about $800,000 pull out. Is that what you said? 800,000?
Yeah, about 800.
So you were raising a fund to expand your investments, and you had a whole lot of people pull out with COVID, and the conversations have shifted. Now, a lot of them have said that they're still committing to it. And Matt, you might be able to tie into this. What does your acquisition strategy look like moving forward on one hand? So 2-part question. What does your acquisition strategy look like moving forward, and how has it shifted based on COVID? And then how are your conversations with investors changing moving forward? And choose whichever order you answer that there.
Sure. Yeah. So I think this conversation was evolving even before COVID-19 started affecting our ability to raise capital right now. So one of the things that we looked at was we were initially raising money into our holding company to fuel our growth, right? The pool of investors that are comfortable with investing in cannabis touching operations is about like this, right? If we could bifurcate our businesses so that we could raise money to fund the operations in one bucket, and then set up a second bucket and raise money into that to fund the real estate acquisition, construction, and growth on that side, your pool of potential investors grows from here to here, right? And it's a lot easier for investors to wrap their heads around as well. They can also quantify the risk a little bit better. And so we thought that might be a good approach for us to fund some of our larger capital needs versus raising money into our operating business and owning the real estate outright. And so what we've looked at doing is creating a separate fund that would acquire real estate. Our immediate needs are in Missouri. We recently won licenses there. And these investors would own the real estate, and that would really help us immensely and take a lot of the burden off raising capital in the operating business, and provide outsized returns for the investors.
Sure. Now, in the cannabis business, if, CJ, you said that you believe that it's somewhat recession proof, and it makes it through, a lot of the reasons that we're seeing, kind of an uncertainty crisis in commercial real estate right now is the uncertainty around whether or not tenants will pay rent. I'd imagine that conversation has not really creeped into this focus. You're pretty confident that the cannabis businesses are going to be able to pay rent. Does that change the conversation at all, or are there different legal aspects that you now put into things based on the crisis that we have now, or is it kind of just moving forward, pretty much same as before with just a consideration to the market impact on other sectors?
I go back to what I said earlier about the fact that we don't have federal relief that a lot of other businesses would. So it's a good thing that we're still an essential business and we are still plugging along. We're paying more rent than the average bear, that's for sure. I mean, we always have paid more rent because we are doing something federally illegal. It's the green tax. So any of the places where we have leases are typically far more than the similar place right next door. So I can imagine that most of the cannabis commercial real estate investors are probably very happy right now with what's going on in cannabis.
Nice. Anything else to add on to that?
Well, I think it might be important for your viewers too to understand why that is. So it's not that landlords are greedy and they're imposing a green tax on tenants that are operating cannabis businesses. It's more about how they structure the capital stack for the real estate investment itself. And so, a traditional landlord that's leasing to a cannabis business is unable to put debt on that property. And a lot of times, if you have a traditional commercial real estate investment, you're getting loan to value of 70, 80%, right? So a cannabis real estate investor is looking at the opportunity more, you're solving for whatever that return is that you would typically look for on a levered basis. You're solving for that return on an unlevered basis. So you're charging substantially above market in your rental rate in order to back into an unlevered return that would match your levered return on any traditional investment.
Sure.
So the upside of that, if you're able to have a tenant sign, a 10, 15-year lease in some cases, especially if you're funding any of the TI or construction or even equipment costs, and blending that into a rental rate over a 10 or 15-year period, your upside is that if the Safe Banking Act goes through, for example, and you're able to put traditional debt on these properties, you get a substantial boost in your returns by being able to look at a levered return versus an unlevered return. So there's substantial upside. You just have to be comfortable with the risk. And you've got to do your due diligence on your tenants to make sure that they can ride out the storm. As CJ mentioned before, a lot of these cannabis companies, in the current environment, are operating on really thin margins. So you've got to do your due diligence and make sure that those tenants are able to pay and do have sound business structure.
Yeah, that makes a lot of sense. I guess as we come towards the end here, there's one or two final questions that I have, and one on another call that I did, somebody had mentioned, his name is Fred Hubler. He's a financial advisor out of Philadelphia. He specializes in wealth management there, but also does a lot of 1031 exchanges. So we were talking about the implications there, but he mentioned the massive push into private equity he thinks he's going to see with stressed debt, distressed businesses. CJ, you mentioned earlier that people are realizing it's a lot harder to operate and run a profitable kind of dispensary, and that you're mentioning the higher rent costs and the higher returns on investors, but until safe banking is passed, they're not able to leverage that, and so they maybe necessarily that green tax is crippling to some of these tenants that are unable to operate a professional business. What role do you see private equity playing in maybe in your fund beyond real estate or just in the cannabis industry as a whole, specifically now that we're seeing this shift?
I think we all anticipated 2020, even prior to COVID, being a year where cannabis businesses sort of circled the wagons and focused on operational efficiency more than expansion. I think that most of the institutional investors I've spoken to are making more cash deployments towards their current holdings than they are new ones, to make sure they stay solvent, make sure they stay, make sure that they're in a good position after. Once we see a couple of different force multipliers happening down the road, those force multipliers being SAFE banking bill, or when a state goes from medical to adult use, or quite frankly, some sort of federal legalization. So I think that we all looked at 2020 as a year of circling the wagons. What I see lining up right now are a lot of institutional investors looking to go after distressed companies, offering distressed debt, or there's going to be a lot of consolidation you'll see in the industry this year. This economic environment for cannabis prior to COVID, this is all before the reality of the last month, was all going that way anyway. And I would anticipate a lot of consolidation happening across the entire industry. Every one of these states is its own island nation, has its own regulatory system, and has its own economic environment, because there's no transferring cannabis across state lines. So it's all got its own, each one's got its own sort of dynamic, but I think across the board, you'll see those similar characteristics of consolidation, of a lot of distressed debt, and institutional investors this year investing in their current portfolios and doing follow-ons. Then I'd see a lot of new investment going in, new cash deployment.
Sure. Matt, what do you think?
Yeah, I mean, I think you're absolutely right, CJ. A lot of these companies that have existing investments are focused on making sure that those businesses survive right now. And as you mentioned before too, it was already happening before COVID. I think it's just more pronounced now. And you've even seen that on our side. We, over the last 3 weeks, really just dove into our existing operations, making sure that, the foundation was strong, that there were no issues, and that we were a well-oiled machine. And so if you see a lot of PE firms and organizations focusing on what they've got, it also creates a lot of opportunity. I mean, there was a lot of competition for deals, leading up to this, that's sort of fallen off. And I think if you're well capitalized now, there are some very attractive deals out there that are not that competitive. So I think, you were asking what role will PE, private equity firms play, in the short term. I think, those that are well capitalized and have a great foundation, will be able to find some really interesting opportunities to invest in.
That's awesome. Yeah, I appreciate that, guys. Well, the final question would be, what questions should I be asking that I'm not?
Well, I'll say this, and cannabis has its own rules to some extent, because we sit in this quasi-legal, illegal world, and without real access to typical banking services and things like that. You read my bio early on. I created a technology services company, a legal technology services company, out of my basement to be $100 million run rate, 60 million plus, and closed 2012, 60 million plus, and 14 offices in 3.5 years. My brain is wired around hypergrowth. I did that because I had leverage, because I had things that banks would give us that I don't have here. But the one thing that kept me up at night for the past 2 years was not being able to grow fast enough, because everybody else got the head start, started before Maryland. And now what's really funny is it's come back around. And I'm sure if I'd been given all that money from the publicly traded companies, we would have done what other people did too. I'd like to think I wouldn't have, but I'm sure that they were getting rewarded for that hyper growth. And now I'm being asked to speak on certain panels about running operationally profitable and responsible businesses and not growing too fast. So I think that the lesson in that is that until cannabis becomes more normalized, you're going to see the rules being rewritten over and over and over again. So to any of your viewers, I'd say look to the management team first and foremost and make sure that they've got sort of strong fundamentals. Guys, Matt keeps me in check all the time. I'm the go guy, and he's the one pulls me back, and he's the responsible one. But we've got a fantastic management team. Make sure that your investors are really looking at what those operators have around them before they make those investments.
Awesome. Not anything to add? Should I be asking something I'm not?
No, I mean, just you really, the biggest thing for me is, how have your strategies changed and how are you adapting, not only with COVID, but, in cannabis, the ever evolving regulatory environment. How you're constantly adapting to federal mandates, to state changes in how they regulate the industry, and that's exponentially or becomes exponentially more complicated as you move across into other states. And so, how are these businesses adapting their strategies? I mean, I think that might be something very interesting to jump into.
Cool, man. I appreciate that. Well, any closing thoughts?
Thank you for your time. I appreciate it.
Yeah.
Hey, thank you guys.